Hello there and good afternoon. Thank you for staying with News Desk. And now let's look at matters business. My name is Kelvin Nyakundi. Now, the Privatization Authority is confident that Kenya Pipeline Company is properly valued. The company's initial public offering saw it present 11.8 billion shilling shares at a value of 9 shillings a share.
The equity value of this company, right, is give or take 164 billion, the equity value. But then why did we choose the EV/EBITDA as the basis for valuing this company? I see a lot of conversation talking about, Total Energy, talking about banks, talking about, price to book. I want to say this. For analysts in the room, when you're valuing a bank, okay, in relative terms, you almost know what multiple you'll be using. That's very clear because the bank's book actually drive their growth. And therefore, price to book is the metric. It is actually meaning that's the reference multiple when it comes to bank valuation. So for banking sector coverage, for those who have covered the banking sector, you'll be familiar with that particular metric as a relative for valuation purposes. Okay? And then when we talk about price to earnings, we're happy to look at price to earnings because when you talk about valuation, it is about the income method, it is about the asset method, it is about the comparable method. But then that income method has variant. So if you go all the way to the net, you actually be missing out on comparability because when you have a capital intensive business such as KPC, okay, accounting policies becomes a challenge because, it is susceptible to manipulation, as you may know, okay? Again, the capital structures are not the same. Capital structure in the sense that, we're talking about a debt-free company, you're comparing it with a company that has loads of debt, and leverage can always play for you. The offer that is before you is achieving 3 things. That is the non-tax revenue measure to Treasury. Number 2 for us is deepening the capital markets. And number 3, it is unlocking the full potential of KPC. Being listed, Joe, I expect you to access capital markets more often, to drive your modernization and expansion.
The potential investors coming in will be investing in a future which is guaranteed. In terms of a future they can share in, a future where they guaranteed returns, a future of a company which is going to unlock its potential to the fullest. And as I said, we are open for scrutiny, for governance, and to be able to not only help our investors in terms of sweating their assets, and being able to return a decent return to the investors, we are also open to ensuring that we maintain our core mandate, which is enabling the security of supply.
The Ministry of Agriculture and the National Highways